Hello traders, welcome to this live FXDD webinar here on the 8th of January 2020, new decade ahead of us with a lot of price action probably to be expected, of course. We're going to take a look at some of that in the upcoming session, what could be at least expected for this week at the very minimum, of course, and take a look what kind of trading setups might be interesting. First of all, though, got to explain this risk disclaimer. It explains the fact that trading CFDs, foreign exchange, and global financial markets is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for informational and educational purposes only. This webinar later on will be recorded, and will be uploaded to the FXDD YouTube channel. So subscribe there to get all of the videos, analysis, and also these recordings, of course, of the webinars. And if you want to join live, check out these two links with the live trading and live educational webinars from Nenet and myself and Elite Currency offered here at FXDD. All right, so with that said, let me now close the presentation and offer the view on the charts, of course. Let's see what's going on from a price action point of view. There has been some interesting price movements here. Hang on, let me find the charts, first of all, so I can share that with you. Want to first show your dollar. It has, there we go, failed to continue. It didn't bounce at the 21 EMA zone here. In fact, it did bounce at the weekly pivot point, but it was too small of a bounce for follow through. It didn't re-break above the 21 EMA high, didn't get a continuation, and therefore instead continued to stay below the 20 EMA and actually push below the 144 and weekly pivot point for some momentum to the downside. The pullback after the bearish momentum bounced at the 21 EMA again for a further leg lower. So it is building some type of ABC correction, and it looks like this is now an ongoing wave C. Question is how far this wave C will continue. For the moment, the target is 111, I would say, and let's see if price breaks below that 111. If it does, then in that case, I think we're looking at a potential, let me, just for convenience purposes, switch accounts actually, so that I don't get these warnings about the indicators, because the indicators are meant for, or are, have different account number set up. So let me do that right now so that it doesn't bug us the entire webinar here. All right. So looking at the larger perspective and picture, if it does break through 111, then it's starting to make a bigger breakout of this support, the 144 on a 4-hour chart, and this trend line. And in that case, there could be more downside. I don't know if this is going to be a 5-wave pattern like this, for instance, taking price down to 109.50, or maybe some 3-wave pattern that could stop at a higher level. But if it breaks to 111, I'll put this fib from here to here, and there's a good chance price will go back to the 61.8 fib. That's at 110, as you can see, or the 78 at 109.50. At one of these two spots, I would expect a bullish reversal back up again, because if I look at higher time frames, like the monthly, for instance, it does look bullish to me. Let me show you why, just in case you didn't know. 2 out of 3 candles are bullish, with bullish closes near the high. And the HMA 20 is up, not visible here, as I already indicated in the FXDD video yesterday. Perhaps you saw that on the euro dollar and pound dollar. So this bearish swing, in my view, likely over. Nothing is 100%, but likely 128, 125 to 108, and a retracement up to 115, I think, most likely. So from that perspective, let's go back to the 4-hour. Long-term is up, whether that's now or later on. Question is, how far will this ABC push, right? Is there a chance that if it bounces at 111, it could still be bullish, right? Because in this case, if it breaks to 111, I'm in the short term bearish until 110, 109.50, and those are long-term bullish bouncing spots and reversal levels, right? But if it stays above 111, what then, right? Is it still perhaps bullish? So from a wave perspective, if I look at this push up here, this was a 5-wave up. This was an ABC. And then we got an upside. So we got to analyze this upside a little bit better in my view. Let's do that. And if it does bounce around 111, it's questionable. Whether that could still be a bullish scenario, maybe it could be, but I don't personally see the wave structure in this push up that could justify it that much. The upside looks more corrective, so I'm leaning towards the fact that price at this moment, with the breaks below these fractals, will probably push below 111 and make this bearish move to 110. I'm leaning towards downside with the failure here for price to stay above the 20 EMA and continue higher, basically. So rather than a break pullback continuation, we got a break above the 20 EMA and a re-break below the 20 EMA. So odds are now shifting, in my view at least, to down in dollar strength based on these moving averages and price patterns, fractal patterns. Adrian is asking about gold. We'll certainly take a look at that. That's a very strong trend. Geopolitics and international politics have certainly helped that, fuel that uptrend and upside continuation. So I do apologize if you do hear a background sound. I'm not sure if you do hear any sound. There's some, just right now, all of the blue, some construction work started, which haven't heard before today. So, but hopefully you don't hear anything. So I'm leaning towards a bigger ABC pattern, and I think that this is likely to push lower. Okay, great. Thank you, Ali, for that. I'm happy you don't hear anything, or much at least. It might make some retracement first. Euro dollar is not a big mover, so it could go back into 111.50 first. After hitting 111, make some retracement and then break. I mean, ideally, there's a push to 111 right here, right now, then a flag, and I think a continuation towards 110. That's probably the easiest way to trade it for downside. Right here, there's not a lot of space left to 111. Maybe on a 15-minute chart, small push lower. Otherwise, I would rather wait for an hourly bear flag after hitting 111. Before trading that to the downside. It's a reversal trade. It's a counter trend trade. So space is tight. It's not as, let's say, it's not as easy maybe to trade to the downside. I would only consider upside viable really at this point if price at the very minimum would need to break above the weekly pivot point like this, make some type of flag pattern, and then re-break again. In that case, things are shifting. Maybe this the bearish ABC is completed earlier than I expected. We had a break above this resistance trend line in that case, and the 20 EMA is back up again. Only then would I consider that that would be a significant shift, and again, and increase the odds of upside. Pound dollar is a little bit more indecisive, but ultimately, from a wave pattern point of view, I'm still leaning towards an ABC down at this point. With this being an A of a triangle, this being a B, and I think that this could be part of a C with an A, B, C of a C. Triangles can get tricky because the question is, at the beginning of triangle, to me, seemed already likely because of the strong uptrend and the strong downside. I thought we would get higher lows and lower highs. So far, that has been happening. We got a higher low. We got a lower high. We got a higher low. We got a lower high. We got again a little higher low, right? So that pattern has been indeed happening and taking place. Question is how to read that triangle. That could be sometimes tricky when you get into further in the triangle. At the beginning, it's kind of straightforward. You got an A, you got a B, but the C and the D, they can be a little bit more complicated because of the fact that which swing belongs to what. Is this an A, B, C of a B, or is this a B finish with an A, B, C within C? I'm leaning towards this, that this is A up for B and this is A, B, C for C. But things do get more messy, right, in a triangle because price action volatility slows down, even though the pound dollar has made very, very large movements up to 135, down to 129, up to 133, down to 130, right? So a lot of price movement, but even for the pound, despite the large volatility, things are slowing down a little bit. It's now right in the 20 EMA, and there's no clear winner at this point on the pound, at least. I am leaning towards a bearish break here for a move down to 130 to complete this ABC pattern. But I wouldn't trade it on the 4 hour. If anything, only the hourly could be ready with this break. But the break was with the doji. A little bit tricky. We did have good bearish engulfing twins. I would lean towards the 1 hour setup. That might be okay. But I would have to put the stop loss above 132.15 and the target would be 130. Small risk, maybe okay-ish, in my view. Once again, all of this is my 2 cents. If it does move higher, a little bit better, because then a entry at 131.40-ish, the stop loss 132.50 and a target at 130, better reward to risk ratio, but I'm not sure if it's going to get there. There is a doji. It might push up. It's difficult to say. It's 50-50 probably if it moves up or higher. Small risk here, maybe with a small extra risk at 131.50 could be another way I could solve that, but would not, trade it with any normal risk. I think it's a triangle. It's partly counter trend at the very least. So more difficult setup requires, in my view, lower risk. But if anything, I would choose personally downside. If for upside, I would really need to see a strong break above 131.75. Personally, with good momentum and a flag and a continuation, same like the euro dollar, that would be the only way that it would flip the table around and make upside more likely. That's how I see it based on current price action here and the moving averages, specifically on the hourly chart. 4 hours is more of a question mark. The hourly leaning towards downside at this point. Daily is looking like a triangle. Weekly is up, plus minus. All right, so that's the majors here. An update on that compared to the video yesterday. Dollar yen. I'm not too interested in that. It's moving up quickly at this moment. It's a little bit of a tough spot, I think, for now. So let's take a look at the daily. If maybe today's daily candle ends up like this, that could be interesting. I would keep an eye on this daily candle for the moment. And a retracement of today's daily candle to about halfway, 50% mark, and then a bounce up maybe to retest the 109.50 zone here could make sense in this consolidation zone. Gold has indeed continued higher. So on a weekly, of course, and monthly, we were already in an uptrend. On the weekly, we had a ABC completed here, and we saw a uptrend continuation after this break of this consolidation zone. So uptrend, full uptrend here. This looks like a wave 3. This bull flag went back into the 20 EMA, bounced at the 20 EMA, broke about 1500, and continued with the uptrend. What looks like a wave 5 for the moment. And there is more space left. Looking at the daily, this is very impulsive, and the 4 hour. So this is looking like a wave 3. And either there could be one more push higher. No, probably not. Price is trying to break below the 20 EMA. So this looks like a wave 5 finished, and I would expect for the moment a correction back to the 20 EMA on the 4 hour chart at the moment. There have been 55 candles not hitting the 21 EMA zone. 55. That is, you might not know it, but that's really, really a lot of candles that have not retraced back to that 21 EMA. That's tremendous. Really a very high level. I don't use that word like too often. So it really is a strong impulse. Anything above 10 to 15 is already an impulse. Above 20 is a strong impulse. Just to give you a ratio. So 55 to 20 is more than 2.5 times as much, almost 3 times there. So they're really very strong impulse. So when that many candles are above the 20 EMA, eventually price should and will go back to that 20 EMA zone. That moment, I think, with the 1 hour chart now trying to break below the 20 EMA, becoming more likely, I would look for a move back into the 20 EMA. I would preferably like to see some triangle now at this moment. Why a triangle and not a flag? I think that this downside moved a little bit too much for a flag, although it could be a flag if it bounces now up and then rejects like that. Again, it might build a flag, triangle or flag, whatever it is, some kind of correction to take place, about 13 candles. And I would expect then the uptrend to continue with at least one more higher high, probably a couple of higher highs, to be honest. Bitcoin is following finally, a little bit less impulsively, but yes, finally. And seems to, let's get rid of this fib. Seems to be finally making a higher high and a higher low. That's important. That higher low, in fact, kind of a head and shoulders pattern. Left head, left shoulder, head, right shoulder. Seems to be taking place. Clear momentum now. So it certainly tested the patience of bulls with going as deep as 66.5. But now I think more and more likely that a stronger push up could take place. We're getting a break here as well. So on a 4-hour chart, momentum 2, 1-hour chart as well. Bitcoin can be tricky at times. So let's put the fib from here to here. And it's right at the minus 61.8 target. I think it's a fair chance that we could get a serious swing up to retest the previous high at this moment. I think that, yeah, now it's a little bit late, right? Because in the sense that obviously breakout here or the bounce here could have been better moments for entry. Still looking at the long term, not bad maybe here for a long-term position to retest the previous highs. Another way could be to wait for some type of retracement first on a 4-hour chart, for instance, wait for a bull flag into the 20 MA, because if that happens, then sellers are not strong enough to push it much lower, and that could be a good pattern to trade it up, in fact, as a swing trade. Oil is moving up at this moment. Don't see much of a trade there. Stock index, there was some volatility, specifically with Dow Jones. I'm not sure about. Yes, also on S&P, head and shoulders, ABC down. Now we're breaking above again. That depends very much on geopolitics, trade war as well, but certainly an uptrend is there. Correction has taken place, so one more leg higher I would usually still expect to take place if it were not for this uncertainty in the international politics at this moment. But otherwise, I would expect that uptrend to continue this first quarter at least, right? After that, you might get into a spot where U.S. elections start weighing in, uncertainty starts weighing in as well. Let me get back to some of at least one question I see here in the chat. So gold 4-hour price action. So just in case I didn't answer that, I'm expecting now a minor kind of wave 4 after a strong wave 3 for the moment. And Ali is adding that the trend line is about to break. Yep, agree on that. And I think the bearish break is likely at this moment. And Adri's commenting, I'm struggling indecision sometimes about which swing belongs to what. Okay. Yes, that's good. That's important indeed. Well, I like to use fractals versus the 21 EMA. So if I see fractal, a candle with a fractal, I mean, there are many ways to do it. I like, for instance, using HMA on a higher time frame. I don't have the HMA here. That's a good way of knowing when the swing is finished and a new swing does a pretty good job. On other time frames, I also like fractals versus the 20 EMA. So when there's a candle with a fractal, that is, for instance, let's see if I can get a good example here. So here's a fractal with a candle that is the candle is fully away from the 21 EMA. So that indicates some type of extreme, probably. This could indicate the end of a bearish correction, right? Because the moving averages are aligned to the upside. Here we see a fractal with a candle that is above the 20 MA. I wouldn't say that that's necessarily the end of a full bullish swing because the trend is up. So it could just be a smaller swing before the trend shifts to the upside. So fractals versus 20 MA plus the context of all the moving averages could help indicate that. And we gotta need after that a bigger kind of swing up. And we keep having those fractals, above the 21 EMA. When there are fractals that are, in this case, we didn't get it much, but when price and fractals are breaking below the 20 EMA, that happened here basically in this part, that could indicate the end of that swing. It's a little bit late in this case here. And that depends, because this was quite an impulsive move. But it does a pretty good job of indicating, the swing that basically lasted from here to here in a way. You can also use, let's see, zigzag indicator, awesome oscillator, MACD. Awesome oscillator will help. Let me add that. Awesome oscillator will help because this is all one push. So when it goes back to the zero line, this was one swing like that, right? So now we're getting a correction. This was a big triangle basically. And yeah, it's sometimes difficult to know when the next swing starts. That requires more of a combination of factors to analyze that, like when does the triangle finished, etc. But as price then starts to break these fractals, you can see that this AO retracement didn't go back to the zero line, the middle line, and we got new green bars moving away from it. So at this spot here, more and more likely that a swing up is starting to mount up. So those are some quick tips. We can have a full webinar on that. Actually, it might be a good idea in February, for instance. We can schedule that. Hope I don't forget. Let me hope I remember that, and we can look at that in more detail. These are just some quick ideas. So, all right. Other than that, for the moment, I think that from, let's say, more crosses, more cross currencies, I would say that at this moment, Euro odd and Pound odd are looking more interesting, perhaps, although mixed picture there too, to be honest. But the momentum is up. So if there is a pullback and continuation, it could be valid for upside. But when scrolling out, you can see a lot of sellers here. So I'm not sure if we'll get that pattern. It is also quite rangy and choppy. So good chance we might not get that continuation. Maybe more interesting could be an exotic, like, for instance, the odd Swiss franc. One second, folks. See if I can find it. There we go. All right, we got a clear momentum. We got higher lows, lower highs, lower lows. Clear break as well. And we're going into new territory here. So I think that a pullback and continuation very likely on the Australian dollar Swiss franc, for instance. So that could be an interesting exotic currency pair at this moment. I think yen is a little bit question mark. I'm not a big fan of the yen at this moment. It showed strength and weakness. Not sure about that. New Zealand is looking a little bit stronger than Australian dollar. So, for instance, if the euro odds starts to fall a lot, then I would be more inclined to short the euro New Zealand. And if the euro odd bounces, go long on the euro odd. So it depends on what price action prevails. If I want to short Australian versus New Zealand, I would rather prefer euro New Zealand and prefer euro odd long if I get the bounce and continuation. Let's take a look at euro New Zealand. Here we go. So there was a sturdy pullback, but overall the trend is still very much down. There is important support down in here. That's true. But I think the price might make still one more lower low. We got a breakout of the consolidation zone already. But I think that it would be better to wait for some type of flag, maybe on the hourly chart first here, see how the break behaves. If it is a flag, then the continuation would look pretty good, I think, on the euro New Zealand, for instance. So it depends, how the euro responds to the odd in New Zealand. If there is weakness of the euro, then New Zealand is positioned better because there is, when looking at odd New Zealand, it's moving lower, for instance. So I would rather trade euro New Zealand down. If I'm looking to trade Australian dollar weakness, Australian dollar Swiss franc, for instance, looks good after retracement, for instance. Otherwise, pound, mixture, euro, a bit of a mixture. For instance, there was on the pound odd and pound New Zealand, there were some good ABC corrections. Let me take a look at that. No, that's pound cat, excuse me. There we go. So we had some good upside here, some good momentum up. But we are running into some wicks here. So some retracement is likely. Same like the euro odd. If it makes a retracement and then bounces, it could be okay for upside, right? But not right here. There's a lot of wicks. Reversal traders might be even thinking about short, actually. And there's a lot of momentum here too. So some retracement down makes sense. Let's take a look where the 20 EMA zone is. At least into this 189, 25, 190, 25 zone. But shorts, I again prefer with pound New Zealand. Longs rather than pound odd, and pound New Zealand looks better for shorts. Let me take a look at that. There we go. You can see structure is not as bullish. This is even a little bit more bearish in my view, at least. Now, this upside was still quite substantial, even on the pound New Zealand. So if it does dip, have to be careful that it's not a retracement from our upside. So what I would like to see is a break and flag, just like with the euro New Zealand. So euro New Zealand, pound New Zealand, I think could be okay. If we get a break, flag, continuation, euro odd and pound odd are a little bit overextended. If there's a mild retracement, there might be scope for one more higher high on those. Other than that, gold waiting for a flag, pattern for more upside. Euro pound, I'm leaning towards more downside for the moment. Yen doesn't look that interesting to me. And I guess that's it for the moment from my side, from my perspective, my view at this point. Once again, FXDD YouTube channel, of course, you can subscribe to catch all the analysis and videos and recordings of the live webinars and the analysis that we do, Annette and I, regularly. Of course, you can catch those on the FXDD YouTube channel or the links I showed at the beginning, of course, with the live webinars to join live. Nanette, if I remember correctly, we'll be back tomorrow with a live webinar, and of course next week as well. We got plenty of webinars still coming up, and wish you all great trading in the meantime. All right, cheers, bye bye.